Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to the Monday section of Wealth Matters podcast. I hope you guys had a nice weekend. And this episode will be released in early September. So I'll be going over August crypto news during this episode. So let's get started. On August 8th, the U.S. Department of the Treasury's Office of Foreign Assets Control sanctioned virtual currency mixer Tornado Cash, which has been used to launder more than $7 billion worth of virtual currency since its creation in 2019. This is what they are saying. This includes over 455 million stolen by the Lazarus Group, a Democratic People's Republic of Korea state-sponsored hacking group that was also sanctioned by the US in 2019. Tornado Cash was subsequently used to launder more than $96 million of malicious cyber actors' funds derived from Harmony Bridge heist and Norman heist as well. On August 12th, a 29-year-old man has been arrested in Amsterdam for his suspected involvement in the development of Tornado Cash, a crypto mixer service, which was, as I mentioned, banned by U.S. Department of the Treasury. So this was interesting before government have not got involved with any of this. So news of the arrest was announced by the Netherlands Fiscal Information and Investigation Service. And it seems I was just reading that is the Tornado Cash the main developer, and judge has granted another 90 days for him to be in the jail, right, so that they can do further investigation. So this is very interesting. Arrest in Amsterdam marks an escalation in global authorities' crackdown against Tornado Cash and other crypto mixers. Such services operate by pooling together contributors' funds and then redistributing them, making it harder for law enforcement to track the digital breadcrumbs that accompany cryptocurrency transactions. Like, so basically crypto, they are mixing, right? So if I'm sending some money, someone else is sending some cryptos. This mixer services combines and then redistributes on a different to a different address and making it harder to track, right? So that is pretty interesting. And the idea was behind that, you can do this anonymously. You can be provides you more privacy, but it seems, of course, there'll be always be bad actors who will figure out that the ways for them to benefit, right? Also, crypto exchange Coinbase faces industry obstacles and economic pressures. The company is examining its operations in greater detail. Brian Armstrong, CEO of Coinbase, stated in an interview with CNBC that the cryptocurrency exchange is now considering slashing costs. Coinbase shares have shed more than 70% of its value this year as a result of the crypto winter triggered by the price declines of Bitcoin and Ethereum. Now, after all the bad news, this is a good news. Uniswap is seeking to work with a number of NFT lending protocols to combat two major issues within the space as the automated market maker seeks to become the interface for all NFT liquidity. And I love Uniswap. So they are mentioning that they are talking to 7 different NFT lending protocols. They'll be working with each one to solve for liquidity fragmentation and information asymmetry. This will be the first step to building NFT fractionalization and financialization. NFT lending platforms allow owners to take out a loan against their assets, providing them with immediate liquidity while retaining their assets in the longer term. This is similar to how Uniswap and basically Celsius, some of the centralized exchanges like Celsius, Nexo, Voyager worked, where you can keep your Bitcoin or Ethereum or whatever cryptos they support and take a loan on it so that you don't have to sell and you don't have to, one, pay the capital gain because you took a loan, and second, you can wait for those cryptos to go up, right? So you will benefit more. That was the whole point. So now this is the same thing they wanna Uniswap, and I know I'm pretty sure there are others working on it. They want to apply it to NFT space where you can keep your NFT and you can pretty much take a loan against your NFT. You don't have to sell it, and you can use that fund for other purposes. So this will be interesting. Ambetel crypto lending firm Celsius Network is suing its former business partner and the investment firm's co-founder for deceit, incompetence, and unauthorized possession of property. In a complaint filed with the New York Southern District, Celsius claims that it sustained injury as a result of KeyFi and CEO Jason Stone's mismanagement and theft of Celsius coins. So again, Celsius is struggling big time, so they are now trying to get whatever money they can get. I don't know what's going on. Maybe KeyFi, yes, KeyFi may have taken some coins and may not have returned. So let's see what happens. Bitcoin price is currently accumulating within a very lower time frame and hence is speculated to begin with redistribution very soon. On the other hand, the BTC price has been trying very hard to hold above the lower trend line for a long time. The extended bearish pressure may soon drop the asset below the trend line. Interestingly, the Nasdaq is bouncing upwards while the Bitcoin appears to be primed to reach most probably 21,500. So let's see what happens. The yearly moving average is on the verge to cross the 2 yearly moving average, which has been bullish during the previous rallies. But right now, I also see a lot of bearish pressure. So let's see what happens. The biggest news coming out would be Ethereum. The Ethereum community is more giddy than usual. I attended one Zoom call where Ethereum developers have been celebrating, even singing as they advance toward the merge. An event hailed as the most important technological upgrade in the history of crypto. So, do you guys know what exactly merge is? What do people mean by the merge? ETH2, Ethereum 2.0, ETH 2.0. The project has been called by many things, but it's the merge. More simply, the merge is a long-planned Ethereum upgrade aimed at improving the network. Such upgrades are commonplace. But this is the most important one to date, and its success will pave the way for developers to introduce a host of new features to the network. The merge will merge the current Ethereum mainnet or the public Ethereum blockchain, which is used by everyone, with something called the beacon chain. Currently, both chains exist in parallel, and I have also used beacon chain, and of course, I use a lot of Ethereum mainnet. Um, Right now, Ethereum mainnet uses a mechanism called proof of work, which is also being used by Bitcoin mining. This is why people are able to mine Bitcoin as well as Ethereum because of proof of work. You put a lot of computers together, they solve puzzle, and then Bitcoin is granted or given to the miner who solved the puzzle, right? Or Ethereum. Once this merge is complete, though, the Ethereum mainnet will shift away from proof of work and instead add up the beacon chain's proof of stake mechanism or POS. So POS, proof of stake, differs from traditional proof of work, right? So how does the proof of stake work? Once Ethereum shifts to a proof of stake consensus mechanism post-merge, the network will rely on trusted entities known as validators to verify transactions and add new blocks to the blockchain. A validator will be chosen at random each time a new block is to be added, which will occur every 12 seconds or so post-merge. Anyone can apply to be a validator by depositing 30 to Ethereum. So that would be, if you apply mid-August price, that's about 60 grand worth of Ethereum. I think that's not too bad because when I looked at it about, of course, some time ago, that was worth over 100 grand. So, and this is needed because they want to ensure the participants have a stake in the success of the network and they run up to date software. So that's why they are not allowing 2, 5, 10 Ethereum. As the Ethereum Foundation explains, prospective validators will then be added to an activation queue that limits the rate of new validators joining the network. Once a validator is activated, it will be eligible to review and approve new blocks the Ethereum network proposes to add to its blockchain. In return for securing the network, validators will earn Ethereum as reward. So before we were providing, or actually we are still providing computer, right, for proof of work or miners or machines. Now you will be staking your Ethereum and you will earn Ethereum as reward. While the 32 Ether staked as collateral serves as a major incentive to behave appropriately, there are also punishments for validators that are incompetent or malicious. Namely, they can be penalized with the loss of some or all of their deposit. The merge hasn't happened yet, but the beacon chain already has over 400,000 validators. The Beltrix upgrade, right, which is what it's called, which begins the final countdown, is set to activate on September 6th, and the merge itself will be completed at some point between September 10th to 28th. So I'm looking forward to this. If the merge goes well, I think it would be bullish for cryptos and especially Ethereum. So I'm keeping my eye on the upgrade or the merge. Let me know what you guys think of this episode. Thank you so much for watching and listening. Have a great day.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!